Hi, this is Ho. I'm a option trader. Today is Saturday, May 23, 2026. It's 9:10 a.m. Japan time. As usual, I'd like to look back at the market and talk about where we are right now. Let's start with Japan. The Nikkei Nigo closed yesterday 63339 yen. That means it has recovered very strongly. And on a closing price basis, it marked a new all-time high. Around 3 days ago, on May 20, the number of advanced stocks was only about 675. That was quite low. But after that, we had two straight days where more than 2,000 stocks advanced. So the market clearly bounced back in a very broad way. Yesterday, there was also strong momentum around the space-related stock. Prime Minister Takaichi talked about a major investment in the space sector, and with the SpaceX listing expected in June, the world space team became very active. The Nikkei Volatility Index is now at 28.35, so it's not too high and too low. It's sitting in a very balanced zone. The Nikkei PER ratio is 18.03, and the EPS is now around 3512 yen. EPS has really surged. It broke through the 3,000 yen level very quickly, and is now above 3,500 yen. ROE has also improved significantly, now at 10.37%. For Nikkei Inigo companies, I think the key target level is probably around 12% ROE. If we get there, that would be quite strong. We are currently at 10.37%, so we still have about 1.7% point to go. And if Japan moved beyond that, we could eventually start seeing something closer to US dollar ROE, maybe even around 15%. So I think this is important point to watch. Meanwhile, Japan's 30-year government bond yield is at 3.97%. Its profile moved above 4%, but it closed around 3.97%. The yen is around 159 yen. So it moved close to the 160 level. Overall, Japan's market still looks very strong. In June, we also have the World Cup and we have the G7 summit. So those events will all also matter. But for now, the market feels very active. Now let's look at the US market. The S&P is 7473 points. The VIX is at 16.7. So fear remains very contained. The move index is around 78. It has risen a little, but not enough to be a major concern. The US 30-year yield is at 5.06%. Gold is $4,509. And the gold volatility index has also come down to around 23.86. So from gold's movement as well, I think we can clearly see that equities are the main character right now. Stocks are the center of the market. Bitcoin is around $75731, and that also looks relatively calm. So overall, the structure has not changed. Equities remain the main asset class. Within that, Japan is especially strong, and because of the political comments and the expectations around the space sector, um, space-related stocks are becoming a very important theme. I think this flow may continue until around June 12th, um, when SpaceX is expected to list, and maybe it continues even after that, because this is very new time for many investors. So I think this past week clearly showed what kind of the market we are now in. Another big question is this: what is the market actually looking at? We see strange in the space stocks, and we are seeing strange in the AI stock. But then I think about the deeper structure. I think the market is looking at the big theme. Human labor is being replaced. It may be replaced by AI. It may be replaced by robotics. It may be replaced by physical AI, meaning robots in the world. And if that happens, we need an enormous amount of energy. Energy becomes like blood for the new economy. So eventually, this may lead to the idea that we should not rely on Earth resources. We may also need to use a space-based resource and a space-based energy. That I think is the broad direction at a deeper level. A deeper trend is replacement of the human body. In other words, we may be entering an age where human beings no longer need to work in the same way as before. Of course, that does not mean work disappears completely. New type of work emerge, but the traditional form already may gradually disappear. So whether we are talking about AI and robotics or space, I think the ultimate goal is the same. Is the same: to increase the human free time, to increase the amount of the time people can freely use. And if each person has more free time, the next question becomes this: what will people spend the time on? That is a very important question. If we free time increase, then we need more things for people to consume. Maybe entertainment, maybe a new experience, maybe new forms of contents. Existing contents may already be getting structured um, boring, so people may get bored. So society will need a new contents, new entertainment, and new ways to spend time. That also means the entertainment industry may become more important. And it also means more people may become creators because more people will have the time to create. So the point I want to make is simple. Human time is going to increase, and if human free time increases, demand will also increase. So we need more supply to absorb the demand. That supply could be contents. It could it could be entertainment. It could be service. It could be entirely new industries. And these contents connect to something I'm recently be thinking about. And today, many people are worried about currency debasement. The they say governments are issuing too much money. They say the value of the money is being destroyed, and of course that concerns a rate real. But if human discretionary time or human consumption time continue to increase, the society also need more contents and more service for people to consume. And if more things are being supplied for people to consume, then we also need more money to allow the consumption to happen. So I'm starting to think that maybe if human free time increasing the money supply in the line with the growth may not necessarily be problem. So I don't yet have a perfect formula or a complete model for this, but um, I feel, and there may be a relationship between the amount of free time humans have and the amount of money society can support. If people have more time to consume, the economy may also need more money to circulate through that time. And if we think this way, government investment into AI, deep tech, and the space, that may look different. Um, and first, and it looks risky. It looks like government is spending too much. It looks like the money printing. It looks like currency in debasement. But maybe that investment is actually expanding future human consumption time. If where robotics and the space increase human free time, then in the long run, people will spend much more time consuming something. So, if money supply is expanding in line with a future increase in consumption time, maybe it is not as relational as it first appeared. In other words, printing money and investing aggressively into AI or space may not be a problem. As long as those investments increase the future amount of human time that can be consumed. From the perspective, the current range in the stock market starts to make sense. And I think if we don't look at the market through this lens, we may really get left behind. For a long time, we live in the deflationary world. A price moved in a differential way, people through a differential way. So, but now the same thing may happen in an inflationary way. Another important point is interest rates. Now that the interest rates has risen, the time value has come back. And when time value comes back, the people start to think long term. That is very important. In the past, the loss-making deep tech companies often struggled to attract capital. Investors avoid them because they are unprofitable. But now, if a company has long-term vision, and if that vision points toward a better future society, capital can still flow into it. In fact, from a market cap perspective, some loss-making deep tech companies may receive high valuations and profitable companies. In the previous era, investors liked the companies that could say, if we start spending or advertising, we would be profitable. But now the logic may not matter as much. For deeper tech companies, there are maybe not advertising expense to cut. They may still be deeper unprofitable. But if the market believes they are necessary for the long-term future, and they can still command the large market capitalizations. That happens because interest rates has rise, time value has returned, and the people are thinking more long-term. So capital is starting to flow toward companies that represent long-term necessity, and this is the way why we need to understand the kind of price movements that happens in this new era. Things that used to happen, deflationary way may not happen inflationary way. So if we keep thinking with the old deflationary mindset, we may really far behind. Japan, in particular, experienced loudly 20 years of deflation. So I think one entire generation still carries a deflation mindset. In the sense, the younger generations like actually be able to think more freely. So that's don't they don't have much historical baggage or fixed experience from the deflationary era, so we all need to think more flexibility. That's all for today. Please follow my contents as if you there are one buying put option. See you tomorrow.